Hi everyone, I hope you all are doing good. And in today's video, we're going to talk about a very important topic, which is cross-border transactions. We will be covering this topic along with the ISO 20022 format discussion. As many of you might be aware that Swift has decided to go live with the cross-border transactions messaging on ISO 20022 from November 2022 this year. Many of you had left a comment about making some content on cross-border transactions. So here it is. And we will start this topic with this quick introduction about what a cross-border transaction is and what are the different sort of flavors in a cross-border transaction. And then we will jump into the important topic of ISO 20022, right? We will try to relate this. So I always believe that the best way to explain something is through examples, right? And that's what you have been seeing in some of my videos as well. What we are going to do here to understand cross-border transactions and ISO 20022 is also going to be same. I am using cross-border transactions as a use case to help you understand ISO 20022. So rather than throwing a new topic, ISO 20022, and going the theoretical way, we will understand what a cross-border transaction is, what are the pain points that one has today in cross-border transactions, and then we will see how the ISO 20022 format and the whole discussion around and the whole concept around modeling the data in an XML way, flexible way, data enriched model, how that is going to help to bring in some of the advantages to a cross-border transaction and improving the overall efficiency, right? So that is going to be the whole way we are going to drive some of these conversations. If you are coming to this channel for the first time, do subscribe to this channel. And also, if you like the content, please press the like button and also share it with your friends and colleagues. That's a humble request from me. That really helps me and motivates me to drive and make more content for you. All right, let's get started. Now, first things first, let's quickly look into what is a cross-border transaction. Right? As the name says, many of you might be aware, these are transactions which are international in nature, where the payer and the recipient happen to be in different countries. Now, this could be a bank transfer, this could be a credit card payment, or it could be any other alternative payment method. For example, you could use an e-wallet or a mobile payment method. There could be numerous ways of doing the transaction. However, the concept here is that the payer who is going to make the payment and the recipient who is going to receive that payment, they happen to be located in different countries, and hence we call them as cross-border transaction. Now, generally speaking, there are two different types of transactions. One is the wholesale transaction. That is a transaction which happens between two institutions, for example, right? Let's say, for example, a bank has initiated a transaction with another bank. In that case, or a financial institution for that matter has initiated a transaction with another one. In that case, it's a wholesale transaction. Now, what is a retail transaction? It's only when ordinary people also do an international transaction, which is suppose, for example, if I want to transfer the money to somebody else in a different country, then that sort of is a retail cross-border transaction. Now, there are some stats here. According to the Bank of England, the cross-border payments value will increase from $150 trillion. That was the amount which was there in 2017, so about 5 years back. And we are looking at hitting $250 trillion in 2027. And I don't know if these figures might be revised again in some time. So that's the kind of market that we're looking at, and that's where I think it's very important that we understand a little bit about this whole topic. So in this diagram here, what I have tried to do is I have tried to explain in a very, very simple way of how a cross-border transaction happens, right? So this is the most simple transaction wherein there is a bank A, which you see, which is located, say, for example, in North America. And there is a bank B, which is, say, for example, located in Japan. Now, Bank A wants to initiate a transaction for $100 and they want to transfer this amount to Bank B, which is located in Japan. Very, very simple. Now, what happens here is there is a message that needs to be passed from Bank A all the way to Bank B saying that, can you please credit $100 and change that into Japanese yen before you do that? Yeah. So all of this information is actually passed into the Swift message, but The underlying concept, like I say here, is there is a payer on the left hand side, and there is a recipient on the right hand side, and there is a conversion that is happening in the middle, right? So that's more of like a very, very simplified way of looking at what a cross-border transaction looks like. So this is when there is a direct relationship between the two banks. So for example, bank A has an account in bank B or vice versa. So in that sort of model, this is very, very simple. You don't need any other intermediary players in the middle to do anything. However, let's make things a little bit more interesting. And let's say, for example, that the same bank A has to transfer the money to bank B, but there is no direct relationship between the two banks. In that case, there is another entity that comes into picture, which is called as a correspondent bank, right? So it's like an intermediary bank, and the role of the correspondent bank here is that it will take the money from bank A. So there is a message that you can see that flows in from bank A to the correspondent bank. Then it will transfer the message, another message, to the bank B. Okay, so that sort of has a relationship on either sides, but the bank A and bank B do not have a relationship. This can even be more complex when there are multiple correspondent banks involved. So for example, again, the same model, bank A, bank B, $100 need to be transferred. $100 need to be transferred from bank A to bank B, and that bank B has to get that money in Japanese yen. Now again, the same thing, but here if you see, there are multiple correspondent banks. So there's sort of a network of correspondent banks, and that typically happens when, again, one correspondent bank is not enough. Now that's where the challenge comes in, that the more the number of hops, the more the number of correspondent banks that are required to transfer the money, the more complex the situation becomes, because that would mean that there's more chances of something going wrong because there are more hops, or that could also mean that you may need more time to complete the transaction, because each hop will have its own dedicated time. So the lesser the number of hops, or the lesser the number of correspondent banks, the faster the transaction is. And it should be typically, theoretically, fastest between the two banks if they have a direct relationship with each other. So you can think of some scenarios, say for example, if you do a GBP to a USD transaction, right? You are transferring money from Great Britain pounds to US dollars or vice versa. Then it's typically very fast, because these are this is a currency pair which is highly active. A lot of transactions happen in this currency pair. So that's why you have to factor in all of these things. And we will also talk about some challenges in cross-border payments today. Now, I think it's very, very important we understand some of these challenges, because that is going to help us to lay the premise of what we are going to cover next from here, which is we are going to bring in Swift ISO 20022 messaging into the equation. Yeah. So we will go through in the next video. What we will do is we will go through why do we need Swift ISO 20022, what is the structure of that message, how does it look like, how is that going to handle some of these challenges. But in this video, we are focusing more on understanding the concept of cross-border payments, and then then a little bit about the challenges around the multi-dimensional aspects. So the first challenge over there is broken data formats. Now what happens is that when you transfer the information from one bank to the other through a message, if there are too many correspondent hops, there might be a chance of a data format being broken. Yeah. And there are also certain compliance checks, because when the hop happens from one country to the other country, there are two countries that are now into the equation, which means that every set of country each of the countries will have their own set of compliance checks. That brings up more complexities, right? So there is more time that's needed to do these compliance verifications to make sure that there is no fraud that is happening, there is no money laundering that's happening, etc. Then limited operating hours is another challenge. So because the banks are located in different geographies, and banks typically follow the 9 to 5 working times, it's also a challenge that when you transfer the money, say for example in your working hours, by the time the message is received on the other side, it might not be an operational time for them, which means that there is a delay that's expected, and that sort of adds to the operational complexities of a cross-border payment transaction. Legacy technology platforms. So I think many of you who are working in IT projects might be aware of this. If you're not, then a quick sort of an insight on this point. So a lot of these banks are still working on legacy platforms, which are mainframes driven. Mainframes is one of the legacy technology platforms, or there is some system which is pretty old, and that system doesn't have the capability to drive the maximum benefits that you can get from a flexible open source API based data model, and therefore it becomes a challenge. And that is where ISO 20022 again helps, and we will see in the next video of how it does that. So high funding cost. Well, how is this a challenge in cross-border payments? So what happens is that when a bank has to transfer the money across to a different country, and all of this process has to be done, say on a direct relationship model, for example, then what happens is the banks have to make sure that they have enough funds in the local currency available. Let's say, for example, if I do a transfer from here to a different country, right? I have to make sure that there is, and that's that another bank is also a subsidiary of my bank, or another unit of my bank. Then what happens is, in those cases, the other bank in the different country also has to make sure that they have the sufficient amount of funding available, right? Because when a transaction is initiated, you never know when a transaction will be initiated, and whenever that happens, it has to be executed successfully. If there are no funds with the destination bank, then how are they going to execute and settle the transaction? So they have to keep some capital aside in order to make sure that they are sufficiently covered for any cross-border payment transactions, and therefore there's a limitation for them to be able to use that capital for any other purposes. Yeah, so the money is kind of blocked, and that has to be blocked for the cross-border payments. So that's one of the challenge. The other challenge is long transaction chain. I think we talked about this in the previous slide when we talked about correspondent banking, but again, the same concept here. The more the number of entities, the more complex the process becomes. The other thing is, it's not possible for a bank to have a direct relationship with an entity in every country because of various jurisdictions, local laws. It's a cumbersome process, and that is where they leverage the services of a correspondent bank. But the caveat here is that the more the number of correspondent banks, the more complex the equation becomes, because you're adding too many hops in the chain, and that sort of again brings in operational complexities and also adds to the cost. Then the last one here is weak competition. It's the last but not the least. There are not too many players who are sort of very efficient in cross-border payments, unfortunately, and this is sort of a challenge. There are a lot of regulations, like I mentioned to you, compliance, jurisdiction, local laws, a lot of things, and that makes it very difficult for new players to enter the market, and therefore, provide a healthy competition for the end customers. What happens is that when somebody initiates a transaction, sometimes they don't even know what is going to be the total settlement amount when the transaction is being settled and the recipient gets the money. And there is always this risk of losing some money as well. So if at all there are more competitors in this market, I'm sure they'll give better prices, and they'll give more surety as well in terms of what could be the settled amount that would be given to the recipient. So that's about the weak competition. On the right hand side, I have put a small comment over there. Data is the key to solve some of these challenges. Now, it's very, very important, and this is what we do typically on this particular channel. We always focus on the domain aspects along with the data, because data is so critical in some of these challenges that is where the advantages that we see from a system called ISO 20022, the advantages we see of an open source framework, of APIs, of XML, and all of these things come in. So how do they help to mitigate some of these challenges is what we are going to talk about in the next video. So do not miss this series now going forwards, because some of these topics are going to be really, really beneficial for all of you who are working into cross-border payments. And also do let me know in the comment section if you found this whole introduction useful, and also what additionally would you like to see in the cross-border payments. I'm really active on the comments these days, and I try to pick up and answer all of the comments, so please do let me know what additionally would you like to see. Also, I request you all to share this video with your friends, colleagues, whoever can benefit, and let them know about this channel where we are trying to bridge the gap between technology and domain, payments being the primary discussion at the moment. With this, I will take your leave, There are some reference links as well that I have put over here, so you can go through that. And that's it, guys. I will take your leave, and I will see you all once again in the next video, which is going to be a continuation from where we are leaving this one. So thank you very much. Take care. Goodbye.